All right, today we are digging into some absolutely explosive claims that are making waves in the precious metals world. We're talking about a secret, massive silver purchase that might just be signaling a huge shift for the entire global financial system.
So let's just kick things off with this one central question. Just imagine for a second. What if a major world power made a move completely in secret that was so big it could actually shake the foundations of the financial system as we know it? Well, that's the heart of the story we're unpacking today.
And the scale of this alleged purchase, it's just staggering. We are talking about over 1 billion ounces of physical silver. To give you some perspective, that is more than the entire planet mines in a full year. A move of this size, well, it doesn't just make ripples, it's a potential tidal wave.
And get this, according to the source who's breaking this story, this isn't some small country just trying to hedge its bets. No, this is a heavy hitter, a major global player making a very strategic, very calculated move, completely under the radar. And the intel was apparently coming from sources with deep connections to Swiss bankers, which, just adds a whole other layer of intrigue to this.
Okay, so let's dive right into Section 1, the billion-ounce secret. The core of the story is that a major but unnamed central bank has been secretly scooping up this colossal amount of physical silver. But this isn't happening in a vacuum. It seems to be part of a much bigger trend that we can actually see playing out.
And this is where we start connecting the dots. You've got this secret purchase from the heavy hitter, but look at what else is going on. We're seeing India officially give the green light for silver to be used as collateral in its banking system. That's huge. At the very same time, Russia has publicly announced it's adding silver to its strategic reserves. You see, these don't seem like isolated events. They look a lot like coordinated signals of a major shift in how these powerful nations view hard assets.
Which, of course, brings us to the billion-dollar question, or I guess the billion-ounce question. This isn't just about stockpiling a commodity. Why would a major global power make such an enormous, secret play for physical silver right now? Well, the answer seems to be tied to a much, much bigger geopolitical game.
And this brings us to Section 2, because this secret silver purchase looks like way more than just an investment. It's allegedly a key piece in a grand strategy, a strategy reportedly being driven by the BRICS nations to build a real, viable alternative to the current financial system that revolves around the US dollar.
This slide just lays out the fundamental shift perfectly. For decades, the entire global system has been running on U.S. government debt, Treasuries, as its main collateral. The new system they're trying to build wants to replace that paper debt with physical, tangible assets, gold and silver, things you can hold in your hand that have zero counterparty risk.
So, what's the motivation here? Well, it's a few big things. First, it's about de-dollarization. They want to reduce their reliance on the US dollar and its policies. Second, there's a real and growing concern about the sheer size of US debt. Third, they want assets with no counterparty risk. If you hold the physical metal, no one can default on you. And finally, and this is key, bringing silver into the mix widens the collateral base, which lets a lot more of the commodity-rich nations in the global south get in on the game. And just to hammer home that debt risk, the source points to this number. The U.S. national debt is closing in on a mind-boggling $39 trillion. From the outside looking in, you can see why other countries are starting to ask just how sustainable is a system built on top of that.
And here's the thing, they're not just talking about it, they are actively building the plumbing for this new system. China's tackling it from two sides. You've got the collateral leg, where the Shanghai Gold Exchange is setting up offshore vaults to make it easier for other countries to store and trade physical gold. And then you have the currency leg. China's CIPS payment system, which is a direct alternative to the SWIFT network, has quietly expanded into 185 countries. The infrastructure is being laid piece by piece.
Now for Section 3. All of this high-level geopolitical maneuvering is having a very real, very physical impact on the market, especially in London, which is the key hub for silver trading. We're talking about a massive squeeze.
And this is where the claim gets really dramatic. According to market insiders, the London Bullion Market Association, the LBMA, now has a free float of 0. What that means is there is basically no unallocated, available silver sitting in their vaults. Any metal that comes in is already spoken for before it even hits the shelf.
This timeline shows you the chain reaction they're describing. To cover their shortfalls, the US-based COMEX exchange supposedly had to ship up to 100 metric tons of silver to London. Even a major Chinese bank apparently had to lease metal to the LBMA. But here's the kicker. The moment that metal arrived, it was immediately shipped right back out to customers who were demanding physical delivery. It's like trying to fill a bucket that's got a giant hole in the bottom.
This also helps explain a pretty strange thing we've been seeing in the markets. Usually, when the supply of US dollars tightens up, you'd expect asset prices to fall. But gold and silver have been rising. The theory here is that the available supply, the liquidity, of the actual physical metal is shrinking even faster than the supply of dollars, which is putting incredible upward pressure on the price.
So to really wrap our heads around the scale of what's being proposed here, it helps to just zoom out for a second. The source suggests that this isn't some radical new idea. It's actually a return to what's been the historical norm for thousands of years.
I mean, just look at this slide. For 5,000 years of recorded human history, gold and silver were the ultimate form of money, the ultimate collateral. The current system we're in, the one based on U.S. Treasury debt, has only been around for about 100 years. It's a tiny, tiny blip on the historical radar.
So the source poses this really simple but profound question. Which one is the anomaly? Is it the 5,000-year standard of hard assets? Or is it the century-long experiment with government debt? It really forces you to kind of rethink what we consider normal when it comes to a global money system.
Okay, so with all that as context, what should we be looking for now? What are the key signals, the canaries in the coal mine that could tell us if this massive shift is really picking up steam?
Here are 4 critical signals to keep on your radar. First, watch the silver inventories in Shanghai. They're reportedly at less than half their normal levels and still draining. Second, keep an eye on the physical delivery requests on the COMEX exchange. Is that metal staying in the US, or is it being shipped out to plug holes somewhere else? Third, watch for rising resource nationalism. China's are already putting controls on silver exports, and other countries are starting to do the same with their own resources. And finally, watch U.S. policy itself. The U.S. has now officially declared silver a strategic mineral, which means it could very well decide to implement its own controls down the line.
And all of this leaves us with one final, powerful question to think about. As the infrastructure for a new, commodity-backed system is being built right before our eyes, and as the physical inventories of the old system are being drained away, are we watching the beginning of the end for this 100-year experiment of using debt as the world's primary form of money? Only time is going to tell.